Well, ladies and gentlemen, it looks like the stock market sell-off is continuing. Absolute bloodbath in the markets today. We got to break down the markets in general, stocks, charts, some earnings, and we have to go over what I'm doing in these markets. But first, make sure to get your 5 stocks from Moo. Link down below. Deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Again, link down below. It's free money, guys. Get your money. And now let's get right into the video. So the markets closed about 10 minutes ago, and like I said, it was a bloodbath today. We had the S&P 500 down 0.5%. The NASDAQ went down 1.5%. We had the Russell down 1.3% as the Dow went down. It actually held up pretty nicely, only went down 0.3%, and surprisingly, the VIX was down 0.7% on the day today, and not really a surprise, but we had the metals up, gold up 0.9%, silver up about 0.5%. And what we're noticing here on SPY, which, not to toot my own horn, but we've been talking about this, SPY's getting rejected right by the 180 moving average on the 4-hour chart, which means, as of now, the downtrend seems to be continuing, guys, and I'm not going to change my mind on that. I'm not going to be extremely bullish in the short term on these markets until we start breaking out of this moving average, which on SPY is right around, let's be honest, I mean, for this to really start changing direction, it's got to break well above 445, which is where my alert is. It's got to get above 450, and honestly 460. 460 was the double top resistance from earlier in February. You guys can see here we hit about 460 in the early days of February and in the middle of February. So for this to really start changing direction, changing course, we got to break 450 and 460. And at that point in time, if Russia tensions start dying down, which as of now, we're not really seeing that, if they cease, maybe they come to an agreement or something, who the heck knows, maybe that's going to cause the markets to jump up. Obviously, we have the Fed meeting coming up in about 2 weeks from now, which is going to play a huge role. We saw Jerome Powell say yesterday 25 basis points is likely what's going to happen. Well, I don't think he really said that exactly, but that's kind of what we know at this point. 50 basis point hike is probably not coming. That's a long shot at this point, especially with the Russia-Ukraine situation going on. So I'm going to be watching 450 to about 460 on SPY as the true level for a reversal to the upside. And when it comes to triple Q, very similar, right? We've been calling out this 180 moving average on the 4-hour chart as resistance. We got rejected there today. Triple Q went down 1.4%. And I have my alert set at 355, but honestly, this reversal needs to occur. Well, for it to occur, it's got to break well above 355. We got to start breaking 370 and probably, 380s. That's where we're really going to start gaining some steam if we start breaking the highs from the middle towards the beginning of February, right? If we get bulls to get us out of there, momentum starts building up above that point towards the high 300s, that is where a real full-on reversal is going to occur. So not much has changed, technically speaking, when it comes to SPY and triple Q. We're still in a directional downtrend, and the moving averages, we're failing at these moving averages, guys. So that's some thoughts there. Nothing crazy in terms of the markets today. Let me know your thoughts down below in the comments. Smash that like button, and if you haven't done so already, what are you doing, guys? Make sure to subscribe, and I've been uploading YouTube Shorts the past day or two. What do you guys think about those? Drop me some ideas in the comments if you want me to make more YouTube Shorts. They're what are they? I think the time limit's about 1 minute on those, so they're quick, concise videos. What do you guys want to see in terms of YouTube Shorts? Drop me a comment. And now let's talk about some stocks and some companies that reported earnings. The first one I want to talk about is Best Buy, ticker symbol BBY, which completely broke out today. Best Buy went up 9% on the day, and it's now up almost $30 from the recent $82 low, which was hit just a couple of days ago, guys. No joke. About a week ago, Best Buy was at $82. Now it hit over $110. It closed over $110 on the day. Again, up 9% on the day. So what we're noticing is, technically speaking, this is now above the moving averages. We're trading at a multi-month high, and we pretty much broke the downtrend, at least, the downtrend that we've been in since the end of November. and we broke above 105, which was resistance earlier in 2022, and now we pretty much filled the entire gap to about 115. You guys can see earlier in the day, Best Buy was trading near 112, 113, 15, that general area. So at this point in time, it is a little bit overbought. It's a bit stretched on the 4-hour chart, so I wouldn't be surprised if we saw some selling towards maybe 105 again. If we test that as support, maybe we could go back to 110 from that point. And if we break 110, 115, the next gap to fill, as you guys can see on this chart, is around 125. 125 was resistance in the end of August, so that's the next main level that I'm looking here at, Best Buy, to where it could potentially go. But again, it is a bit hot in the short term, so before we get to 125, let's wait for a pullback. And before I even forget, geez guys, let's talk about the earnings. They did $2.73 EPS, which came in line with the estimates. Revenue came in at $16.36 billion versus $16.59 billion estimated, so they beat actually, they didn't even beat EPS. It came in line with the estimates, and they missed revenue. And in terms of full year 23 sales and EPS guidance, those came pretty much in line with the estimates. And when it comes to guidance, we got some full year 23 and 25 guidance. They see full year 23 of revenue of about 49.3 to 50.8 billion. Full year 25 revenue of 53.5 to 56.5 billion. So over the next couple of years, they're expecting revenue to continue to grow. What is that? Single digits, high single digits, 7-8%, something like that. So that's probably a big reason why the stock ended up shooting up. That guidance, pretty solid. And let's see the same store sales growth. I'm not sure. I don't have that written down here on my iPad, but it seems like, okay, this is another reason. Q4 same store sales was down. Actually, no, that's not a reason. I thought that set up. It says same store sales for Q4 was down 2.3% versus the 0.9%. So same store sales are suffering right now with Best Buy. But again, overall, that sales guidance is pretty good, and that's shooting up the stock in the short term. So watch out for those points. Again, 105 is a key level, 115 and 125. Those points are very critical here for Best Buy on the chart. We also have Affirm, which I got a request on my comments to talk about Affirm today. And if you guys want me to talk about stocks, please drop them in the comments. I'll look at them, I'll take a look, and I'll decide whether or not I want to talk about them in the video. So this gentleman asked me about Affirm, which you guys can see this stock has not been performing well. And I saw a lot of, financial analysts, YouTubers talking about Affirm, heading into 2020, this year, 2022. This was more towards the end of 21. They were saying, oh, Affirm's going to be a great company. It's going to be a great stock in 22 when more people do buy now, pay later. And it looks like they ate their words there, because this stock is down from $176 to $31. That means it is down 80+% in just the past couple of months, which is unbelievable. Now, does that mean the stock, or rather the company, does that mean the company is going bankrupt? It's a bunch of BS, dog crap company? Not necessarily. It just means that the stock was overvalued, that the stock got ahead of itself. And at this point in time, being down 80%, there could be some sort of value here. There really could be. But another thing worth mentioning is, if we're getting into a recession right now, right, in my opinion, buy now, pay later stocks, you don't want to be in those, because spending is going to be contracted, right? People aren't going to be spending as much. And with all this inflation, we're already seeing that. We're already seeing people cut back on spending. So I think people are going to be focusing more on, the necessities in their lives, rather than trying to buy this new trinket and, buy now, pay later, and have to worry about it later. Some Americans might do that. Some people around the world might do that. But for the majority of people, I don't think they're going to be doing that in the very short term. So the fundamental, or rather the thesis behind this is, if we're in a recession with high inflation, I would stay away from it, and the stock price obviously reflects that. And overall, I mean, it's still on a downtrend. You guys can see it's under both moving averages on the 4-hour chart, and we just hit a low on this 4-hour chart of $31 just a couple of days ago. And until this reverses, and a reversal point would be around, honestly, 60, 65, $70. Until we start breaking out of these moving averages, I don't want any part of a firm. And again, with a looming recession, all this inflation, I'm a bit nervous about it. I'm a bit skeptical. I'm just being honest with you guys. So the next one here is Broadcom. They just reported earnings, AVGO. So let's see what they did. You guys know how I do it here. I don't like looking at earnings before making these videos. It makes it a bit more fun for me making the video, right? So they did adjusted EPS of $8.39 versus $8.08 estimated. So they beat EPS. Sales also beat $7.71 billion versus $7.6 billion. So nice double beat for Broadcom. They see Q2 sales of around $7.9 billion versus $7.43 billion. So that's above the estimate, with EBITDA of around 62.5% of expected sales. And they see cash and cash equivalents of around $10.2 billion at the end of Q1. That's a lot of money, guys, $10.2 billion. So it looks like the stock is up after market hours. It's up about $17. It closed at $578. Now we're trading at about $559, and we momentarily got above $605 a share. So this is directionally bullish here after market hours on the intraday chart. And on the 4-hour chart, we're now starting to break out of these moving averages, and we're not quite yet out of the wedge on this time frame. But if we start breaking 605, 610, which again, we were just there about 10 minutes ago after market hours here, if we retest 605, 610 and we break that, this could end up going to the moon. I don't want to say to the moon like it's going to go up 100%, 500%, but it could fly. It could go up 630, 650. Maybe we go back to test that high from a couple of months ago, 680. You know, this could catch fire. So watch out for Broadcom, AVGO. Nice double beat from them. Nice guidance as well. Now let's go to Costco. This is one that I'm excited about. I haven't looked at it yet, so let's see what the stock's doing. We saw Target the other day shoot up like crazy when they reported. Let's see what Costco's doing. Is it the same or is it different? And you guys probably know, if you're watching this, you probably already saw it, but let's see Costco. Costco is moving up. Actually, it's moving down a bit, barely moving at all. It closed at $533. Now we're trading at about $526 after shooting up initially to about $548. So talk about volatility, guys. It shot up after the earnings. Now it's shooting down. And of course, with the earnings call coming up, that could change a lot of things. So let's see what they did. $292 versus $273 EPS estimated, so that beat. Sales came at $51.9 billion versus $51.37, so it looks like they double beat for Q2. We're not quite yet getting any guidance. I mean, quite frankly, it's too early. It's only 4:20 p.m. when I'm making this video, so the earnings call is coming up. We'll get some guidance and some more insight at that point, and now it's moving down even more. It closed at $533. Now we're down to $522, so this is down about 2.5% after market hours. Again, it's very volatile, so we're going to be watching Costco here definitely tomorrow, and I'm going to be watching it here in general in the next couple of hours. And you guys can see we've talked about this on the channel the past couple of videos. Costco is breaking out of the wedge and the moving averages on the 4-hour chart. Now it only has to break above 535 for this to really start gaining momentum. If we take out 535, guys, I'm going to put my alert right there right now. This could end up going mid-high 500s, no doubt about it. And who knows, this could end up happening during the earnings call, maybe after the earnings call, as the markets kind of digest the earnings and the guidance. And that's what I always talk about, guys. Sometimes, well, I don't always talk about this, but sometimes when companies report, it takes a couple of hours, a day or two, maybe a couple of days for the markets to digest the earnings, and then they start picking direction. So I'm being very patient with Costco. I have my alert at 535. Again, if we take that point out, this thing could end up going going up very fast. That's just my opinion. So that's Costco. We also have Marvell, MRVL, that reported. We see, technically speaking, a head and shoulders on Marvell. We have the left shoulder, head, right shoulder trading under the moving averages, and now it looks like we are down about $1.50 in the aftermarket hours. So let's see what they did. They ended up doing 50 cents versus 48 cents estimated for EPS in Q4, and they did $1.34 billion versus $1.32 billion estimated. So they double beat for EPS and revenue, so pretty solid. They see Q1 adjusted EPS of 48 to 54 cents versus the 50 cents estimated, so nice EPS guidance, and they see net sales of around $1.425 billion, plus or minus 3% versus the $1.38 billion estimated, so pretty nice Q1 guidance for EPS revenue. They double beat, and again, the stock is down about $1. Actually, now it's down even more. It's down $2 in the aftermarket hours, and what you guys have to realize is the stock market, it's a lot of the things don't make sense. Companies could beat revenue guidance, great EPS as well, and the stock could be going down after market hours. It just doesn't make sense sometimes. But overall, if you're a long-term investor, and I'm not a long-term investor in Marvell, but generally speaking here, if you're a long-term investor, you shouldn't be spooked out of one bad quarter, where the stock, or not even a bad quarter, but you shouldn't be spooked out if, the EPS guidance is great, but the stock goes down. That should not spook you out if you're a long-term investor. If you're a trader, it's a bit different. And in this case, the technicals, like I said, we have a head and shoulders. It doesn't look like it wants to reverse. So from a trading perspective, I'm going to be cautious. I'm not touching Marvell until it starts breaking above at least 70, 75. And at that point, and I have my alert at 78, which is right by the neckline of the head and shoulders, right? And at that point, if we break out, that's where I'm going to be potentially playing Marvell. So the next one here is Smith & Wesson, SWBI. They also reported, and oh man, thank God I dumped this stock, guys. All you guys on my Patreon know I got into Smith & Wesson. I made a little profit on it. Now it's dumping like crazy. It is down almost $3 in the after hours. That's not good. That's on top of being down over 1% on the day. So they did adjusted EPS of 69 cents versus 86 cents estimated. So a big miss on EPS. And they missed sales, $177.7 million versus almost $200 million in sales estimated. So double miss for Smith & Wesson in Q3. And I'm not seeing anything on guidance, but at this point, I don't think guidance could save them. And by the looks of it, their guidance is probably going to be low for the next quarter, under the estimates. So this stock is getting demolished here after hours. It is down about 15%. So I'm actually happy I got out of it, guys. I'm actually happy. I got in it initially thinking of it as a long-term investment. But then as I was in it for a couple of weeks, I was looking at the numbers and I was thinking about it. I was like, maybe I should get out of this at a break even, maybe a little bit of a profit, and put my money where, and this is actually after the Google split got announced, I started thinking about this, and I took my money out of it, and I figured Google's announcing a split, they crushed earnings, the stock's moving down, let me just buy more Google with the money. And that's exactly what I did, and I'm happy I did that, again, because the stock is now down $15, and if I was still holding it, I would be down on my position, a good chunk on my position. So overall, guys, those are stocks that I'm looking at now. Best Buy, Affirm, Broadcom, Costco, Marvell, Smith & Wesson, and of course, we could talk more and more and more. We can be here all day, but that's it. If you guys want to see more insight on oil, Russia, check out my previous video. We broke those topics down more in depth in that video. And if you enjoyed this video, make sure to hit the like button, subscribe, drop me a comment, let me know your thoughts, and join my Patreon if you guys want all my buy, sells, call outs, morning update videos, plus more. All of that is linked down below on Patreon. And don't forget to get your 5 stocks from Moomoo, also linked down below. Deposit at least $100 and you could get up to 5 stocks, each of which could be valued up to $3,500. It's free money, guys. Get your money, again, linked down below. I'll catch you guys in the next video. Peace out.